Good evening, everybody. Okay, I want to point out something that it took me a long time to figure out myself. But when we get up in the overbought condition, you can see there was kind of a resistance level here on the Dow. There's also another little resistance level right here. And the one thing that I was always slow to do in the past was when I started seeing in the overbought area indecisive trading. This is why you've seen me say, starting a few weeks ago, you want to start having both long and short positions in the portfolio. Because I'm usually a little bit slow to pull the trigger instead of saying, all right, it's time to take profits. As a matter of fact, we're going to do a little bit of that Thursday night. And I've got to check to see. Maybe it's Thursday night. Start working on when to take profits. And I've got kind of that illustrated. So there's even times where you start taking profits even though you might not have a confirmed sell signal because of the probability starting to go against you. So I want to make this kind of stressed point to say when you start getting up in the overbought area and you start seeing indecision, dojis, hanging man, doji shooting star, even today with the Dow slightly positive, you could see what happened. It failed at the same level it's failed a few times and started selling off. Now that in itself is somewhat of a warning, but it only takes a matter of seconds to look at the Nasdaq chart and realize, oh, they came back down below the T-line and they're not able to bring it back up. There's been a change of investor sentiment. So starting over here, you can see how things are starting to get a little bit tentative, both in the Nasdaq, even though it's not as evident over here. But again, with the demonstration of these indecisive signals over here in the Dow, when you add those two together, you have to start thinking, wait a minute, there's starting to be a little bit of change here. And the reason I point this out again is being the eternal optimist, I was always thinking, well, maybe it will still go up. Maybe it will still go up. Instead of saying, whoops, what am I actually seeing here? Not very strong bullish sentiment. It's time to start rolling over. So just in our in the picks, I'm going to go down through the ones that we've been recommending or still in. For example, NCTY has still been acting well. However, even though this is very hidden, they started lower today and then came back up here in the overbought area. This tells you probably should start watching to see whether there's going to be a little bit of weakness in here. So if you're long, probably want to put your safety stop at today's open. Because logic says if they start coming back down through there, they're coming back to test the T-line. That was even more evident. And these are the things that you kind of look for to tell you, start thinking about taking profits when they start gapping up in the overbought condition. Even if you've got a trade that you just put on, for example, this BNTX looked like a good chart today, trading up positive, but closed back below the T-line. So what really kind of rankles your emotions or your ego is, man, this looks so good. Oh, I'd hate to close this out because this looks like a good chart, except for the fact that it didn't confirm today. And this was always the part that I waited way too long. If I didn't close this one out today, then I've got the next simple rule. It has to open positive and trade positive. And I say trade positive, meaning not open positive and trade up and then backing off. So that becomes a very simple stop loss process. That if this opened positive and started trading up, you simply put your safety stop at today's close. Because logic says that if they opened positive and they came back down through yesterday's close, the sellers are still there. With BTNX gapping up, would you not close when it came back down through the open? No, not this close to the just the beginning of this trend. You could have. I mean, but even when it came back down through, it held up above the T line right on to the close. So that could have been another way to do it, is trade it up when it started coming back down through the open, close it out, and then see what it does here at the T line. Exactly. It didn't do what you expected it to do. Okay, we got a bunch like this. The longs, still staying long on QS. And as I mentioned in the chat room today, it's probably because I know too much about this company now after doing the reverse engineering research, with them getting fairly close to the solid body lithium battery. As long as this fry pan bottom is in effect and stays above the T line, we'll stay with it. And it has great upside potential based upon what's going on in that sector. Now, MP, kind of the same scenario. It's still, it's still a fry pan bottom, and it gets pretty testy, pulling back as much as it did, right down to the T line. But the one thing that I have found through the years is, as long as it stays above the T line, I'm all right. Slow stochastics. And the stochastics, remember, is not a crucial factor. It's still the signals. We just want to know where the stochastics are. Now, remember, a bullish signal in the overbought area doesn't really mean all that much. That could be true too, Jay. That's why you saw the Dow holding steady and the Nasdaq getting beat up pretty bad. Another one that we've stuck with is this little CLSN. Even though it traded lower, it's in this channel after a gap up. Now let's watch for the message to see if today's profit taking ends. When it does, then you can start picking it back up. And this one, TRXC, looks pretty bullish. You could still be buying this one. You definitely want to see it get through this level. But if you're buying this one, you don't want to see it close back below the T line. So on MP, if it traded below the T line tomorrow, you would get out and wait to see where it's going from there. Yes. Oh, see where it was going to close. That would be a function too, John, of the market. If the market was selling off hard and this one starting down and heading down through the T line, yeah, probably would close it out. Okay. You did that one. The airlines were acting well. probably because they're going to get a boost from the stimulus package. So here's Spirit Airlines, J-hook pattern. However, now you've got a shooting star or a doji gap up. You put your safety stop right now at today's low. It should be going in this direction. If it comes back down through there, the T-line's the next likely target. So you're in the overbought area. You're seeing a doji at the top. That's where you start putting your safety stops in. CRTO, nice little J-hook type pattern, classic pattern. You can still stay long on this one. EAF, same scenario, kind of a J-hook pattern. And GMBL, same scenario. Now, when they break out like this after trading indecisively, that's when you want to start looking at to see what's happening in those or in that stock. That's where you use your reverse engineering research. So anytime you see that fry pan bottom, you can stay long unless it closes below the T-line. We closed out FTFT today. I haven't been in CCIV. I know people in the room have been, and it has dropped. Last time I saw, it was down in this area after the merger. So I don't know what to tell you there. Other than after the shooting star, if I had been long, the stop would have been right here. Notice how they opened it positive the next day and then brought it back down. So even though they gapped it up again today, I wouldn't have been all that concerned. I would have said, oh man, I should have held on to it and then watched it trade off. But that right there told you some of the selling was starting. Did we do this one? Yes, that gap up told us start looking for selling. And here's another one that if you got good profits in it, today it did a bearish harami doji. Now remember, anytime you have a signal that has a doji involved in it, it's usually a little bit more compelling. So if I had seen this today, number one, followed by the fact that the markets were selling off on the close, I would have probably have closed out at least half that position. Because where were we getting to be? We're getting to be that far away from the T-line. You're seeing a bearish harami doji. Take off half the position because you're in a high-risk area. If it opened positive and continued positive, then at least you're still in it with half a position, less exposed. If it opens lower, you close it out, and that way you can say, I got most of that trade. Very good. All right. Right now, this market does not look enticing, especially over here with 340 points to the downside on the Nasdaq. They've pulled the plug. Could be this level, could be the 50-day moving average where they're going to find support. So on something like this, with it gapping down from the doji, closing below the T-line, close that one out. I had Had good prospects until today. Yeah, I don't know whether I can get the transports up over here. Yeah, the transports held up, but you can also see what happened. The transports were up here, and they gave back a good amount of it today. Not that it was getting weak, but it was weaker than what it was earlier. Yeah, and that's what's happening here in the Dow. Every time they try to take it higher, they're running into this little resistance level right here with the preview being doji, 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 lots of indecision. So things are starting to get a little bit squeamish up here. And that's why going to charts that were starting to show sell signals, but just to be safe, you started adding some short positions to the portfolio, which obviously this one's working well, especially now that the market has turned over. Let's see, I could get to that here in a minute. FPRX, that J-hook pattern is still working, except now you have a doji up here in the overbought area. Good place to put a safety stop is down here at today's low. So this is just kind of logic. Oh, here was one that we went after because of the breakout. We didn't close it today, but if it opens lower tomorrow, we close it. It needs to open positive and trade positive. Yeah, I saw that. But while we're here, look how flat that one has gotten. If you decide to trade it, you got to trade it on the basis that they better keep it up strong, because you had the same thing over here in Saba. Look how flat it went. It opened positive today and came right back down. So there was nothing there. Same on OCGN. After the strong run up, it's basically gone flat. In this case, a little bit negative. So when do you buy these? The next time you see a strong buy signal. But you need that strong buy signal to clearly illustrate the bulls are stepping back in. And CRMD held up well, but you put your safety stop right here, because if they come back down through there, where are they? They're back here in the range that told you they were breaking out. And if they're coming back into that range that tells you they're not breaking out, you close out the position and go someplace else. So the shorts are working. IMMR was a good example of a bearish engulfing signal, stayed above the T-line, stayed above the T-line, closed below the T-line. Then they did the doji sandwich, which is continuing this downtrend. So this is where you can put 2 plus 2 together and kind of confirm that as long as you're below the T-line, you can stay short. And what tells you that your horse is good? When they're starting to gap these things down, your stochastics are heading down, the probabilities are greatly in your favor that it's going to be in a downtrend until they see a sell or a buy signal and a close back up above the T-line. This one had a good-looking chart, but I reviewed it after I recommended it, because there's your doji best friend. This one can still be shorted. However, the percent move isn't all that spectacular unless they really break it down big. Why? A bearish engulfing. Notice this, I say notice. Notice where they took this today. Right back up to the T-line. That makes it a very good short if it opens lower tomorrow, because there's your bearish doji sandwich. Where do you think your next target's going to be? Probably the magnitude of that candle, which takes you down to the 34. Lumber liquidators has been a good steady eddy to the downside. And now they're starting to pull the plug. They broke through this level. Now your next level should be down here, which kind of corresponds with heading down toward the 200-day moving average. So we're going back to say, when you started seeing this market get a little bit testy, that's, I want to stress this as much as I can. I would ignore the fact before that the markets were starting to show a little bit of indecisiveness in the overbought area. I think, oh, I'm going to stay predominantly long. But I've learned through the years, when you start seeing things roll over, look at your long positions and say, is this the place I want to be, or are there good short positions right now telling me I probably should have a little bit of balance now in my portfolio? Oh, let's see, what was I saying? Oh, space is another one. As long as it stays below the T line. Look at kind of your bearish flutter kicker signal right here. I would stay short on space, and we went short on PayPal because look how you can add this one up together, your 2 plus 2. A gap up doji in the overbought condition that far away from the T line. They gap it down the next day. Jace, yes, but that's where we did just a few days ago have a lot of good-looking bullish charts. But as we saw in the Dow on Friday, it was bullish all day long until the last 45 minutes. They sold it off. Today it was up pretty strong, back up to that resistance level, and then in the close they were selling it off. That's a pretty good indication that they're not bullish enough to keep the Dow or any of the other indexes up toward the top end of the range, that we're still in kind of a nebulous trend, with obviously the Nasdaq selling off hard, and that's what's providing a lot of these good short positions right now. So ribbon looked like a good long not too long ago. Nice J hook until doji hanging man gap down. Now it's a good short. First target, second target. So the other side of the coin is, even if you see a good looking chart, when it turns, it tells you it's been a change of investor sentiment. That's exactly why we're using the charts and the signals to tell us something is changing. And so you need to acknowledge that quickly, or at least not hugely long positions or big percentage long positions. You start modifying that by adding some short positions to the portfolio. And this is why you want to know your signals and patterns. Start seeing a dumpling top, which is the opposite of a fry pan bottom. The fact that they were trading below the T line pretty much tells you that the probabilities are much stronger that you're in a downtrend than an uptrend. So anytime I see something, again, the Apple almost had the same kind of pop-up, pullback, trading flat, and slowly rolling over. Oh, Carrie, I did the March monthly. I think it's the 270s. And the reason for that is people are less apt to buy puts, so there's usually less open interest or less volume on the put side. So you might have situations where a 2 274 or 276 doesn't have any volume. So you have to kind of decide, all right, do I do a 270, which has a lot of volume, so that I can get in and out quickly instead of being stuck in something? Was Microsoft, yep, started rolling over, and the fact that it closed below the T-line, if I had been long, let me make this bigger so I can see the colors. Everything's okay, everything's okay, everything's okay, everything's okay. That would have told me, let's look at your trajectory and look where you were closing. Which short ETF is good? Boy, that's up to each individual finding, is there a short ETF for the big the big stocks like Apple and Amazon? So we've been seeing some weakness in the biggies now for a while. You can see how Netflix, when it came up, it wasn't coming up with any great resiliency. It was up, down, up, down, up, down, and then rolled over. Okay, there's some, Shirley. Whoops. There's S. There's Q. Yeah, so there's your short fund for the Qs. NVIDIA got hit, so it might be coming back to the 50. Amazon just couldn't get started. Look how flat this one is. This is why we've stayed away from it. There's just no direction. Tesla got hit today. You can see its big dumpling top. So at some point, this is where you watch to see if they're going to pull the plug, because the dumpling top has the same characteristic as a fry pan bottom, except the opposite direction, which means investor sentiment's getting weaker, 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 and then bam, they knock it down pretty hard. Okay, so some of the, I'm going to take a look at these because these were looking good earlier. Kind of a J-hook pattern on PLX. These may have changed by the time the end of the day. Looked at these. This one is ERF. That's a good good J-hook pattern. Okay, TBT, short for the treasuries. If that doesn't move around, well, I guess it does move around pretty decently. There you go. Yeah. Let's see, what else we got here? Oh, uh-oh, that's not good. What did I do? Oh, these started out as good J-hooks, POWW, except with it closing as a doji, now it's kind of iffy. And BG, that's setting up as a J-hook pattern. MGM, setting up as a J-hook pattern. And GMS, that's a nice J-hook scoop type pattern right here. So you can see where the resistance level is. If this is wave one, if this trades positive tomorrow, yes, the logical conclusion is this resistance level is not going to act as resistance. Look for wave 3. Yes, the gold stocks also were, where do I have them? They're down further. Well, shot spots. Just getting the wrong things here. So there's a fry pan bottom on Allegheny Technologies that held up well today. So that's where you probably want to see if there's something happening there. Again, reverse engineering research. And there's another one, IRIX, another fry pan bottom. So notice what the fry pan bottoms still illustrate. That even though the market is getting soggy and weak, fry pan bottoms will still hold up during that time frame. There's a scoop pattern on IVR. The oils were acting strong today. Crude oil closed over $61 a barrel. So there's a J-hook pattern setting up in this one. ERF we did. CPE. J-hook pattern setting up. There's your classic fry pan bottom J-hook pattern. Let's see. SM. Also J-hook pattern. Gold. Ego. Warning star signal. If this one opens positive tomorrow, you probably want to be buying it. And CDE, kind of a bullish flutter kicker, needs to break out through this level. People have been asking about U.S. Steel. There's a bobble breakout, fry pan bottom, about ready to occur. And yeah, everybody was, or I guess they were watching AMC. So this one you could play based upon seeing more strength. Just have a stop in that would tell you that the short squeeze that they might be inflicting again may not, or kind of disappeared. Woozy, come on, what's happened here? So there's kind of that breakout, but it did a doji. If you're long Woozy, have your stop at today's low. If it comes back down through there, this breakout didn't occur. The furniture stores, Kirkland's did a gap up. That's a decent looking chart. And another one in that same industry, EFOI, that's setting up with a nice J-hook pattern. A lot of people were asking about the cruise lines today. They're in the overbought area. This is Carnival, and it's trading down lower, so you got to be careful. You got to be ready to pull the plug on some of these. And Tigger, that's pretty indecisive up here. If this opens lower, you definitely want to be out of this one. You can see how there's been a change of bullish sentiment. All right, so here's the short positions that we would like to find. When Gldm did a bearish left-right combo and started trading off, you could see what a short would have been like in that situation. The airlines are all acting strong. Okay, real quick, do them. That's American, Delta. Well, Delta, you got to be careful. You have a safety stop at today's open. United, safety stop at today's open. I'm sorry, today's low. Southwest, same scenario. And Save, which we got into a few days ago, same scenario. If they come back down through the opens of the lows of these dojis, close them out. And that'll also probably be a function of the market direction. GSM. How did that get way over there? Because it's not the right one. I was wrong there. Did I type that wrong? Oops. GMS. No. That's not supposed to be in the short column. EBON. When they gap it down through the T-line, get ready for a hard sell-off. And API, when they gap it down, I would suspect they're coming down to the 50 to fill this gap. So these are things that have high probability shorts. When do you put a stop at the day's open versus the day's low? Based upon if it's a doji, there doesn't have a real big candle. So remember, a doji has a simple rule. If they trade it lower, they're going to move in that direction. Now, if it's a bullish candle, here's one that should have been stopped out today. If it's a bullish candle, if it traded back below the low, you should have closed it out. The only reason we've held on to it was to give it one more day to see if this reaction is ended. But that's a perfect example that if they come back down through the open of the previous day candle or the body, that's when you close it out. And MOGO, there's your bearish kicker type signal. This one has a good prospect of coming down, filling that gap, or filling that gap, or coming all the way back down to the 50. I click. There's your bearish double doji. So if you saw this, the Cassic's heading down, very simple. If this opened lower, you start shorting it. What was the other one? Whoops. Now this one. If this one opens lower, you start shorting it. Exactly, Tom. So that's where you observe the obvious, that money is coming out of that area. So once things started closing below the T-line, you closed them out. Doesn't mean they're not going to be good buys, just aren't right now. Whenever there's a gap in a price, which one were we looking at? Whenever there's gaps in prices, there's a tendency to come back and fill those gaps. So right now, trading lower on PayPal is likely going to come back to this level at least to fill that gap. If it doesn't bounce back up, then it's coming down here to fill that gap. Peloton also is a double doji, yes, which implies there's going to be more downside. ORMP, there's your bearish doji sandwich, implying there's going to be more downside. BTBT, if this opens lower, what do you got going on? A bearish doji sandwich, the same magnitude as that, probably tells you at least the 50 is your likely target. So this is where it's much easier to do a 2 plus 2 to add up. So here's a gap up and a gap down. You got kind of an island reversal up here with a gap down. This one should have a strong down move. I often have trades that work for a short time and then turn back around. How do you balance the desire not to let winners turn into losers while not wanting to sell your winners too early? That's usually part of the nature of the market. If there's a trending market, usually those moves will last a lot longer. If it's a sideways market or an indecisive market, like we've seen in the Dow here for the last 3 weeks, you have to kind of say, well, they're not keeping my profits very long, so maybe I need to shorten up my my time frame. Or the other side of the coin is, if you're seeing that things are bouncing back up after a couple of days of down move, at least take off half the position, put it in your pocket, and then see what the other half does. I may wait till we tell Jim to do the double line. GM, yes. That was more, here was the place to be shorting because you had a close below the T line. So here's a perfect example of your expected pattern not working. At this point, what were we expecting? Or what should you have been expecting? Maybe a J-hook pattern taking you back up here. When it closed below the T-line, what did it tell you about your J-hook pattern? It wasn't there. What did it tell you about investor sentiment? Closing below the T-line tells you there's probably more downside. Well, here's your short somewhere in here. You could short it, but now you're not at the best place to be shorting. So you could short it, but it wouldn't be the best area to be shorting because you've already had the move. So if you're shorting it, you want to see what happens at the 50 because you're getting pretty close to the oversold area. All right, so right now with this market, this is why you want to kind of use your visual analysis to say, all right, the Dow's doesn't seem to be going up. The Nasdaq is being gapped down. They can't close it back up above the T-line. Start already thinking, I better come out of long positions that aren't acting well. If we've closed out these positions over the last few days before today, because even though it hadn't closed, we bought some, I think on this day, thinking they were bouncing it back up. We closed it on this day because it told us they weren't bouncing it back up. They were still flat. So where do we not want to be if the market's looking like it's indecisive, ready to roll over? It's something that's trading flat because we don't know which way it's going to go. So there's a lot of times we'll be much more glad to take a small loss quickly, have that money back in your pocket so that you can make better assessments as far as where to put that money someplace else, like this one, or even U.S. Steel if it opens positive. So the same numbers. Out of 9,500 trading entities, if the market's heading down, there's still going to be enough bullish charts to make you want to, or at least go after them. But why go against the flow? If we can assess that the market is heading down, we probably should be much heavier on the short side. If I sell short 100 shares, say at 100, and buy it back at 80, do I fork up money at the completion? No, you put out money when you sell, when you go short. So 100 shares at 100 is $10,000. So just like you were buying stock, you're selling that for 100, or what I'd say, $10,000. So that's why you do it in a margin account. So they're going to debit your buying power by $10,000. But that money has gone into your account. It's not usable. Now, 2 weeks later, you buy it back for $8,000. Well, you send that stock back to whoever you borrowed it from, and just like you buy low, sell high, you can sell high, buy low, so that $8,000 that came back into your account is now that $2,000 different. So you made $2,000 on that trade. Yes, so you're credited $2,000. Yeah, but first you have to, that's why you're in the margin, so that when you shorted that $10,000 worth of stock, they held $10,000 in your margin account to do that transaction. And then when you bought it back, they released that $10,000. You were credited the difference of the $2,000. Do you recommend shorting with options or synthetic shorts? Oh, I don't know what a synthetic short is. And yeah, that's also, obviously, when we shorted PayPal today, I did it with options. I bought the puts. Now, if you're doing something at a much lower price, you might just short the stock. But that's up to each individual. It's not something that there's any hard and fast rules. If you buy options, you're going to buy puts. If you just buy stocks, you're going to short the stock. Okay. Do we need to do well, we can't do a training session on shorting because would only take 5 minutes. Are there any other general questions on candlestick analysis? If not, Jim, go ahead and do the double line. Okay, well, shorting is very simple. You're buying or you're selling high and buying back hopefully lower. Okay. Oh, Jim, hopefully you've done the second double line by now. ESRT, good breakout. Stay long, looking for a 45 degree to come off of there. INFN, I wouldn't be long or short. That's sideways. STHC. Did I do that wrong? STHC. No, nothing on that one. POAI. That one, if you were long, you should have been out of it today. That was your warning. Does that look familiar? Something like that. Live. This one, you should have been out. If you were long, you should have been out on Friday. You definitely should have been out today. Again, anytime that you close below the T line, the probabilities have gone against you dramatically. Close out the position. This one should have been closed out today. Oh, for going short, yes, you could probably go short on this one on weakness. AMD, this one you definitely could be going short. Look at the failure, 2 failures. That's not the failure. You can see how it failed kind of in this downtrend. It also failed here at the 50. It did a kind of a bearish double doji. First target is seeing if they can get through this level. They go through that level. The next target is this one, which kind of corresponds with the heading for the 200-day moving average. Blake, we will do a training session on commodities. I was just looking at my desk calendar, which is all messy. We will be doing commodities. We will be doing stop losses. And I will probably mix long-term analysis or long-term trading in one of those, because long-term trading should only take 10 minutes. So I don't want to use a whole session on long-term, because that's just going to be figuring what indicators you might use for a longer-term hold. SOXL. Now you could be going short, or it told you that the semiconductors are selling off pretty hard today. INMD. You can stay long, but it needs some definite. Stochastic's not overbought. Yes, so you've got the prospect of this J-hook type pattern, but it needs some strength. Yeah, I'd rather. So when I say it needs strength, if this market is selling off, anything that you're going to be buying now better have enough strength to show that it's inordinate strength, even in the face of a market sell-off. DNA would not be long or short this one. That's absolutely no direction. I'd take my money and have it ready for someplace else. TDOC. That one you can get ready to go short. Tank. That gap up. If this opens lower tomorrow, I'd close it out because it's coming back to the T line, which means it's heading in the wrong direction. The only way to stay in this one at this point would be to see it open positive and trade positive. Silver, you could go long on this one. And CADE, there's a nice fry pan bottom with that little gap up. That's a good-looking chart. Trying to write that one down, and I've lost my pen. Oh, where's the darn cat? An ENB. That one you could be buying, and I say could be. It's not real strong. You've probably got a trend channel, but now you've got to kind of see what the overall market is going to be doing. DraftKings. That one started out nicely. Here would have been one, again, somebody mentioned earlier, when it came back down through the open, you could have closed it out, or if you didn't close it out, it has to open positive tomorrow to stay in it. Otherwise, if it opens lower, you close it out immediately. Daku, that's a good-looking short. If it opens lower after the shooting star gap down, first target right here, second target is the 200. Mavis, that one has, if you're long, it has to open positive tomorrow. If it opens lower, close it out. And ARKF, this one you get ready to go short. Twitter. Not yet. If I was shorting it, I'd want to see it come down through the T-line. But you can see how junky it got up here in the overbought area. So I'd be more apt to go short. And that's probably also going to be a function of the market. Okay, FNGD. No, FNGO. No, not working. Johnson & Johnson, not a very prolific stock, but if it opens lower, you could short it. You just watch to see what happens at the 50. And Target, nothing. Probably wouldn't be long or short this one. Yeah, right now, it used to be that that to short a stock, it had to be on an uptick. Well, for some reason, they changed that a few years back. And so all you have to do is sell. So if you're selling something that you don't have the stock, the brokerage firm automatically knows that you're shorting. Andrew, yeah, that I don't think we're in a bubble because we're not skyrocketing. It's been kind of a very lethargic moving market. And we've seen backing and filling. That's usually not occurring in a bubble. Let's see, ANY. Oh, I would have been out of that one today. Would not be in it. PLX, again, because it closed below the T-line. PLX, that one, if you're long, it has to open positive and trade positive tomorrow. Cody, you stay long on this one. Definitely want to see it break out through this level. This one, if it opens lower, you're out of it because it didn't break out. Oh, I don't know whether the markets have gotten so big. Silver is acting well, and gold is acting well. So it's not that they're less connected. They're still moving in the same direction. Yeah, and the again, The market's had a good steady run, and it sells off every now and then. Sold off, came back up. A couple of days of selling, and this is why I don't think we're in a bubble, because they sell it off and take profits on the way up. But this time, well, now they did it here too. So we got to see. You still got some room in the stochastics to head down. I would suspect they're coming back to test the 50. You could do a webinar on continuations patterns. Tom, there isn't all that many. And we could do that on a members night. I mean, there's the method's rising, but that doesn't occur very often. So for the lack of frequency on the continuation patterns, I don't even know whether we take the time to do it. All you really want to do is go back to one of the books and occasionally refresh by going through and looking at all the charts. There's about 50 or 60 candlestick signals that you want to look at, not necessarily memorize, but just look at them and say, if I see this, I better come back and take a look. It's the 12 major signals that are going to occur so often that you don't even have to worry about the other 50 or 60. Las Vegas Sands gapped up and did a shooting star. Makes this very simple. You put your stop at today's low. If it comes down through there, that tells you they didn't break out through this level. You know, wheat is having trouble. It's a slow fry pan bottom, but it's been whipsawing. Oh, I don't know why we're looking at this. You can see what's happening in wheat. I mean, it's up, down, up, down, up, down. It's very tough to trade right now. And CLDR, that's a good short. First target, second target. Tesla, you stay short. Dumpling top. See if they start knocking it down hard. Vive. That's a strong sell. Look where they took this to. Almost, I would say that was to the 50-day moving average. You could still short this if it opens lower and continues to trade lower. Facebook has just never been a good trader for me because of it's never really a consistent trend. Now here's one that you can go short if it opens lower, and especially if it comes back down through today's open. Because that would tell you the 200 is not a support after your bearish flutter kicker signal. How do we scan to find the fry pan bottom and other patterns? I thought had some good scans built into Sink or Swim, but they're not running up the tickers you're listing. Pat, to try to scan, especially on Thinkorswim, which has a very tough scanning, it's tough to scan on Thinkorswim. And that's because anytime you've got a brokerage firm that is more interested in making money on the trades, you're probably not going to get the most efficient softwares for scanning. That's why I recommend Metastock or TC2000. That if you're sitting in front of the screen every day, you probably want to use one of those to save you a lot of time, number one, and get much better results, number two. So a fry pan bottom isn't anything more than the visual recognition that when you see that signal right there, which would be an easy scan, which stocks had the biggest percent price move on that day, that when you saw that, say, wait a minute, there's my fry pan bottom. So you don't necessarily have to scan for the fry pan bottom. You're going to find it when the fry pan bottom starts performing. ENTG. That one has to trade positive to stay in it. If it starts trading lower, coming back to the 50, you've lost trajectory. Gldm, which is this one of the gold stocks. It looks like a gold stock. The spider. You could buy this one. Now, observe the obvious. You're in a downtrend. So it's got to get through here, which means it's got to get through here, got to get through here. So if you're buying, you just be a little bit more conscious of what happens once it gets up to those resistance levels. Dix. That one kind of ran out of steam today. It was a Morningstar signal that needed confirmation. If you're long, it has to open positive and trade positive. If you're thinking of going long, at this point, I'd probably buy it if it came back up through today's high. Now, that's also going to be having the markets act or not selling off. Yeah, FNGD is just not coming up over here. I don't know what happened there. Did they split it 10 to 1? Apparently. PLTR, that one needed bullish confirmation of your Morningstar signal, and that bullish confirmation was it needed open and trade positive, telling you the T line was acting as, or not acting as resistance. If you bought it on positive trading today, anticipating a breakout, you would have closed it out here because you're still below the T line. And X1, nothing. This is why you always want to see it close above the T line. So here's another one that if you jumped the gun and you started buying it, when it came back down and closed below the T line, the probabilities are still against you. You would have closed it back out. That one you could short, yes, ASO and AXDX. That one you stay short, you could still be shorting this on weakness. You just want to make sure it can get through the 200, making the 50-day moving average your next likely target. That, Bill, that was probably right. Yes, so the inverse funds or the reverse funds are things you can put into accounts that you can't short. Some stocks still need to be on an uptick, but not all. Some shorts have no shares to borrow. Will, that's, yeah, so if I'm shorting something, I am looking for stocks that have good volume, because if you want to short a stock and it only trades maybe 230,000 shares, the way the brokerage firms function is when you sign your margin agreement, you've agreed to that if somebody wants to borrow stock, they can take it out of your account and borrow it until that position's covered and they can put it back in. On a lower volume, you might not have that stock at the brokerage firm. However, because most brokerage firms are lazy, they'll just say, oh, we don't have the stock, where they could go across the street to another brokerage firm, say, we need to borrow this stock for a short position, and so they borrow from another brokerage firm. However, you can see what the effort is for that. Instead of them just buying stock and put it in your account because you bought it, now they have to go find it in another account, and if they don't have it in their brokerage accounts, they have to go get someplace else. They'd rather just say, we don't have it, and try to. But if you really kick and scream, they should be able to go to another brokerage firm and get it. Facebook, if this opens lower tomorrow, you could be shorting it. Netflix was not a good chart. This one's another one that if it opens lower tomorrow, you could be shorting it. That's probably the right thing to do. If you really want to short something, at least call them up and say, I really want to short this. Can you get me the stock somewhere? And they might grumble, but they will go get it. Marvell, I don't know why that's not coming up. Something's happened. Did I type it wrong? Yes, I did. RVL. That one I wouldn't be long or short right now. If it does break down to the 50, then you can consider going short. You could buy DRI, American Express. Yeah, you could be buying that one. That's pretty strong. The Nasdaq. It could be supporting here, yes. Have to see whether it's doing that or not. Excuse me. You could short it on weakness. Again, that would also be a function of the market acting weak and this opening lower. I would suspect your target would be the 50-day moving average. ALB, one of the in the electric vehicle area, they mine lithium. Nothing here right now. Would not be long or short. We did NVIDIA. Micron, another one that I'd be ready to, you should have closed it out today if you were long. I don't know whether I would short it because your magnitude of move may not be all that great. Walmart. Stay short. That kicker signal told you there's a lot of force to the downside. Marshall, that's true. You need, they're not as user-friendly as some of the other ones. MP needs to stay above the T-line tomorrow. You're still in the fry pan bottom, so that's your last criteria. And we're staying long. As a matter of fact, kind of orienting this one toward the longer-term hold. You've got the fry pan bottom with good bullish confirmation, and you've got this as your first target. Fill in the gap. Wynn Resorts, another shooting star. Put your safety stop at today's open. Yes, this is the short one. So that, what was the percentage move? I can't see what it was, but it, so with that gap up, which was obviously the gap down in the Nasdaq. So where is Oxy trading right now? Is it a high probability trade to short the pullback in an uptrend? You said AXDX is a decent short, for instance. AXDX. Well, you don't know whether it's a pullback. It might be heading back down here, so it's telling you that they're still trading lower. So, yeah, I don't know whether you would say this was in an uptrend. That's not, if that's an uptrend, it's not a very decisive one right now. So you've had sell signals with a very stogy sandwich and trading below the T-line, stochastics heading down. That to me just says there's probably more selling. The Fed, yeah, if they, I doubt if they can change the sentiment of the market, because remember what the market is. It's the accumulative knowledge of everybody buying and selling. So they've already made their decisions of what the Feds may or may not do. But if it's a tendency to raise rates, that's going to slow the economy down, which is probably not the right thing to do at this time. But that's what the selling in the Nasdaq is pretty much telling you. So I don't try to make any assessment of what policies might do. I let the market tell me what everybody thinks the policies are going to do. It's not really a bearish kicker. I mean, technically it's a bearish kicker, but it's telling you they didn't confirm upside. Yeah, more than likely you're still in a downtrend. JP Morgan, when the Bill, am I looking at the right chart? I guess my rhetorical question is, what would make you think you'd want to short JP Morgan? There's no selling right now in that one. NIO, you stay short if you want to short these. The reason I've stayed away from shorting the anything in the electric vehicle sector is one little inkling of good news blasts these stocks right around the other direction. MP, again, we're staying long, but it has to open positive and trade positive tomorrow. And play, just stay long. Cheesecake, stay long. Wouldn't be a buyer of it, but if you're long, you stay long. Snap, nothing great there. If you're long, it has to open positive. I wouldn't be going long on this one. There's not a great trend to this one right now. LX, not a kicker signal, but a kicker type signal. If you were long, first of all, your stop would have been right there because you're in the overbought area. Secondly, with it closing below the T line, you would have closed it out. So yeah, it's not quite a bearish kicker, but it's probably got some force to the downside. QCOM stays short. When they gap down like that, that means there's no bullish, probably going to be no bullish sentiment in it for a while. And this one, after the bearish left-right combo, I would suspect they're heading for the 200. OXY Oxy at 2583. So it's right in here, so it's not anything real devastating. XOP, just stay long. XLE, just stay long. Hoya, you could short this one. Again, there's your shooting star, gap down, force to the downside with you trading below the T line. At least figures coming back down into this area. SPWR, stay short. Again, doji, bearish left-right combo, stay short. There's a wee little teeny gap right there. Everybody says, well, don't they come back and fill the gap? Yes, but it might not be until 2 months later. SPWR, you stay short. GPTC does not come up over here. I mean, just because it's overextended, remember what your number one criteria is. It's not really overextended. It's just steady uptrend. I would suspect it's trying to come back up to the top of this channel. And tank, if it trades positive, if it opens lower, that gap up was the start of the exuberant at the top and then some selling. All right, this is the one that's forcing everything to the downside, is your Nasdaq. So watch to see what it does tomorrow at the 34, which means seeing how the pre-market futures are opening. I would suspect the 50 could be your next likely target. Last one, iSun. All you can do here is stay short. Yeah, the overextended is, yeah, the distance away from the T line. Now that was a distance away from the T line. So you stay short on this until you see a buy signal. It is a bullish engulfing, but you're not in the oversold area. That may just be an up day and a downtrend that yeah, so I wouldn't be a buyer of this one until you see it definitely close above the T line. NQ is forming a bullish harami. No. All right, Neo, we're okay. Last two. That would be a toughie. I would, yeah, you'd have to trade that on watching very closely to make sure the strength is staying in it. Whoops. I don't know. That one's, that's a good looking short. Glad I typed that mistake. You wanted CRVS. That would be a tough 8-2. You could buy it on strength also. Okay, everybody, watch to see how the pre-market futures are showing how this market's opening. Again, we ran into a resistance. It keeps selling off, going into the close, and the Nasdaq's trading lower. The casting's up in the overbought area, so you got to be very careful up here, or start adding more short positions. That'll be it. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.